Anthony Angelillo, branch manager with the Tag Team, powered by Paramount Residential Mortgage Group. We're located over here in Miami Shores. Been in the business for about 17 years. It's actually 18. I keep on saying 17. I've pushed to 18, but yeah, that doesn't feel like it's been that long, but it has. We are a amazing branch. We have done wonderful things at this point. We are interviewing a underwriter, and I just wanted to shout that out. So
Whoop,
hopefully
whoop.
everyone understands that turn times right now are king in this business. So we've made and definitely interviewing a lot of underwriters at this point. At this point, though, I just wanted to say that Tag Team Nation is a LLC tech company, marketing company, and I am the founder and owner of that company. And this is how we are distributing this content to you. Melinda and I have worked our butt off to, compose this content, push it out, and join us September 16th for the board meeting on lead conversion. So I hope to see you guys all attend there. With
Miami
that
board.
At Miami board. With that being said, I'll push it to the mic of Miss Queen Bee herself, Melinda.
Queen M. Hi guys, Melinda Grimaldi, your real estate and title attorney, co-host for Damage Control. And what episode are we on, Anthony? Thanks for always keeping count, because I can't keep that in my head. So episode 25, and this episode was by special request. Basically from the last episode we had, there was a lot of inquiries about how to review offers, how to tell if a DU is a good one. So we decided to switch around our agenda and make this one just for you guys. So a little bit about our show. We help you guys maintain your deals on track, avoid problems in your deals, in your marketing, in your systems, in your business. Today, we're getting back into some nitty-gritty technical things, but it's just as important to make sure that you keep educating yourself. Why are you laughing?
It's just been chaos this morning.
It's been a chaotic morning, technical difficulties and everything aside. I think we're gonna kill it today, Anthony. So
we're gonna get in the zone right now. We get a lot of content to go over.
Yeah, so you guys are gonna have to keep up, but it's recorded and there's a lot of content that's gonna be shared after the show to those that are registered. So as a subscriber, so Anthony's gonna go over the DU part of the process of reviewing an offer, and then I'll go over reviewing the actual offer itself, the as is.
Okay.
So with the DU, let's start off with a basic, if you can please guide everybody as to the different types of approvals. Like there's the pre-approval, there's the DU. What are the things that people see in the initial phases of the offer making, and what should their clients be doing if they have the buyer, and what should they be hoping to see with their offers?
Okay, all right, let's get into it. So first and foremost, you guys can open up the chat through Zoom and on Facebook, because you guys are gonna have questions. So I encourage you to ask questions. And then we will answer them the best of our abilities throughout the entire episode. That being said, what is DU, Desktop Underwriter Fannie Mae? And let's take it back to basics, okay? Pre-qualified is taking a lead and physically taking an application, but not qualifying with documents, okay? Pre-approved is pulling credit and validating documents. Desktop underwriter is taking it a step further. You're underwriting it through the system, which we use in Compass. Some people use Calyx Point. There's many other financial institutions that have proprietary, basically banking systems, if you will. And so this allows us to analyze if we have an approved eligibility with Freddie, Ginnie, or Fannie, okay? And it depends on what system we are running. Man, my Slack's going crazy right now. You guys hear that click, and I apologize. So that being said, also, guys, we wanna know exactly what we're looking for, all right? So I get all the time itemized worksheets. What is an itemized worksheet? A lot of people don't understand that, and I don't wanna get off topic here, but this correlates with Desktop Underwriter. Itemized worksheets are not loan estimates. That's a whole separate show of its own, which we could probably do. Okay, so when you receive as a buyer's agent or as a listing agent, or you're representing a buyer who's pre-approved with some lender you're not familiarized with, and they send you an itemized worksheet, that is a problem right there in itself, okay? Because that's not a loan estimate. They're maybe going to use that itemized worksheet to go over numbers, and now they have, they're parlaying it with, their pre-approval letter. How do you know that person's pre-approved? A good agent, good buyer's agent, and a damn good listing agent is going to validate the desktop underwriter. But how do you know what to really look for? Okay, you know the basics. You guys have been doing this for some time now, I'm assuming. And those of you that are obviously new to the business, you'll understand after this episode what you should look for. Okay, so let's take my screen, for example, and let's open up this. Can you guys all see that?
Yes,
All
we're
right.
good.
Can I do a full screen?
It's as full screen as you're gonna get because it's already, it's good.
That's good?
You're good. Yeah, you're good.
All right, good. All right, so let's go step by step. I've taken the liberty to take a couple of desktop underwriter find-ins through multiple files that I've done business with, and I obviously, took out the borrower's name, but I'm using these as examples, okay? So the physical find-ins usually is about 14 pages, 12 pages, it looks similar to what we're looking at on my screen. I've just spiced this up. You guys will all get a copy of this. I made, I guess, a cheat sheet, if you will. So Melinda and I have provided a cheat sheet. So it's content for you to really analyze and study. So the first thing that I look at, I want to know, if I'm a real estate agent, how many times has this individual, meaning the loan officer, ran desktop underwriter? Okay, so number of submissions is a problem. For me, that's a red flag because that tells me, all right, what are they structuring? How are they making this deal work? If you look at the number of submissions, it should be one or two. Okay, a good loan officer, it should be one time, and if that. But if there's issues throughout the entire process, and there's 11 submission forms that you guys have ran, and meaning the loan officer, that's a discrepancy in itself. That's something that is a red flag. And as a buyer's agent representing a buyer, I would look at that, because then you're dealing with maybe someone, and I don't want to prejudge anyone here, but maybe they're new to the business. Maybe they don't know guidelines as well, or maybe they're just having a difficult time with credit, or it's not picking up assets. There can be so many layers to it. So I don't want to say that it's going to be a bad DU. Why did we take the time to do 11 submissions? What was the reasoning on that? So if I'm a listing agent or a buyer's agent, I would ask this question: hey, heads up, what was the issue with this file that was ran 11 times over? Okay, does that make sense? Everyone?
Yes.
Yes. Okay. All right.
What about? Can I ask a question?
Go ahead. You have 7 of these, and
right above it says approve ineligible. Why does it say ineligible?
Observation. So that means that the front end is approved, meaning the housing ratio and possibly your debt to income ratio. Ineligible, either there is lack of cash, which is assets, or in this case, there could be not a reserve if it was a conforming Fannie Mae conventional loan. So that way there has to be reserves. Now, how you manipulate the system, because I see loan officers do this all the time, is they spike the assets. And that's one of the things that I'm going to go into. Okay, so when you see approved ineligible, you're probably not going to receive this as a buyer's agent, because
as a buyer's agent, as a listing agent, I literally have seen these come in with offers when I'm helping agents review offers. So pay attention. If you see approved ineligible, just knock it out like right away, right, Anthony? Would you say?
Correct.
If you have in a multiple offer situation. Believe it or not, that shows that the buyer's agent didn't even know what that meant, and probably the loan officer didn't explain that properly or even know what's going on, because they just spit it out and emailed it, right?
Correct. We're not throwing dirt against the wall here. Now, all right, if you're doing a jumbo non-conforming product, DU only goes up to 510,400. So you're not going to see, a DU approval on that, and that needs to be exposed to the listing agent. And that's a different case in point. We have content that goes out, which is video content, when we send out pre-approval letters to really educate all parties involved, so that there's no miscommunication throughout the milestone, because that kills deals. Right there, if you're placing a bid in a seller's market, you need to be spot on. And so this is something that is a big red flag. That's why I prioritize this as number one, too many submissions. Let's drop down, and here's the details. Okay, so here's some of the details. I mean, housing ratio 43%, 100% financing, that's a no-no. All right, why was it 100% financing? What world are we living in that we have an LTV of 100%? Okay, so there's a lot of things that go into detail here that you really, really need to analyze and take the time, because your fiduciary duty as a real estate agent is to make sure your client's in good hands and not in harm's way. Seller's concession, okay? Make sure you're viewing FHA and conventional. They have limits. They have physical limits of seller's concessions. I have a seller's concession cheat sheet. This is our cheat sheet. If those of you that do not have it, after the show, I will send it to you. This breaks down, okay, who can get what and how much. So let's take, for example, case in point, this is an FHA loan, 6% is our max. That's including real estate agent concessions, that's seller's concessions, that's overall in total 6% FHA. Okay, everyone with me? Yes?
Yes.
All right. In this case, there's a risk eligibility because it's exceeding the threshold of what FHA limits are. So this means it's either 6.2%, 7%, something is not kosher with the system. It's picking up that you're giving too much concessions away. And people in general, I don't want to say just real estate agents or loan officers, in general in our business, they really need to know the concessions part. If anything, I would memorize that. FHA 6%, VA 4%, conventional is different, 3% up to 6%. So in this case, you want to analyze that, because if they're lacking the cash to close and they need a seller's concession, and this is coming up with a risk eligibility, and it's highlighted here, the minimum statutory investment requirement and loan case number is $11,025. It's telling you, this is it. This is all you can go for. So you need to make sure that you contact that buyer's agent or listing agent and tell them, hey, look, this is it. This is all we can do. Because if you're asking for too much, obviously that's something that could jeopardize the bid you're placing.
Well, so not only is it jeopardize, that you're asking for too much and it can't be done, and then you're wasting your time on a deal that in the end, they're either going to be short, or you're negotiating after inspection period for credits that you're already maxed out, or you're doing something that's more than that can be done. And then depending on who you're working with, it only comes up like at the final hour, and then there's a big problem.
It's awful. I've seen it happen all the time. And then you're slicing into realtors' concessions. The seller's pissed off because they gave too much. The lender's upset because now they're trying to waive processing their underwriting fee. It becomes chaotic, like our morning this morning. All right. No one wants chaos. They want just everything to be systematic and smooth, obviously. So in this case, this is something I would pick up on. All right. And if it takes an extra hour to figure it out, in fact, you know what? I have a true story. Yesterday, an agent of mine, okay, great agent of mine, part of Women's Council as well, she sent me a potential client. Well, it's going to be a client, and contract went in. They were agreeing at $315 with $9,000 towards seller's concession, FHA. Then they decreased it to $310 with no concession. That's a different case, obviously, but where I'm going with that is someone would think, okay, well, it's $5,000, so it's going to be $5,000 less of the closing costs. It doesn't work that way. We needed that concession. When we went over the numbers, we weren't over the threshold, obviously, of $315. We're not maxing it out, but we compromised at $5,000. So thank God she called me to go over those numbers. Seller's concessions are key, especially with Desktop Underwriter, but in general, it can really screw up a deal last minute, and you're now slicing commissions last minute, and it just becomes very chaotic. All right. All right. Moving on forward. Lates on student loans. This is a big problem with COVID right now and everything going on. That's why I put it on here. But in general, the rule of thumb on lates, it's we run a Cavers report, okay? And the reason why I do this up front is I want to have an A grading, okay? There's 3 types of grading: authorized, meaning approved, we're moving forward; C for claim; D for default, okay? So in this case, when you're running Desktop Underwriter, okay, I'll go back up there as a reference. Actually, it should be up here. Yeah, it's right here. Okay, this right here is going to be read on this is a piece from Desktop Underwriter. All right, if you see anything in Desktop Underwriter about late payments or delinquencies or derogatory items on federal student loans, part of a loan officer's job is to ask, are you in federal debt? Okay, are you late on any federal debt? It's on page 3 of the declarations page. So that's a question that we need to ask as loan officers. Reading Desktop Underwriter as a buyer's agent, if you see anything pertaining about student loans, okay, my first question: are you late on student loans? Have you been making your payment on time? Are you in deferment? Are you in income-based repayment plan? What are you doing in this case? Okay, because this right here is going to jeopardize your deal. Most lenders do not run this report up front. They don't have to. They do it at contract. I do it on every single file because I do not want my clients going through underwriting and then last minute, 2 weeks in, saying, hey, we've got some delinquencies on student loans. There's a problem here. Now, there's a workaround, obviously. Here's the workaround. You can ask them to go into loan rehabilitation. You can do consultation, repayment plan. But that authorized A rating, if it's not an A rating, you can't move forward with an FHA loan. You might be able to go conventional, because we're not running Cavers report going conventional. But if their credit is not the best, good luck to that. Okay, that's going to be very difficult pushing it through as a conforming product. So where I'm going with this is that this is a big thing that nobody bothers to look at with Desktop Underwriters, which is your DU, if student loans have been late, or if they're in forbearance, or they're in collection. Have they been late? You know, the credit report validates all of this. Most loan officers are not physically reading the credit report to the best of their ability. Not to bash them, but reading a credit report is a whole different topic. And this is very big that I see. And I just believe that as a buyer's agent or a listing agent, this is something I would take into consideration, especially with what's going on. Okay.
Well, like what you said, you run these reports early. That's the lesson for a lot of things, is doing the searches early. That's why we run our permit searches early. That's why we run our title searches early. Because if you wait till the end and you have a problem, you're either canceling a deal, trying to figure stuff out last minute, trying to fit, as what do they say, a square peg in a round hole to try to make something work. And you know, you're going to piss off a lot of people. So it makes for a much smoother process if we know in advance, because like you said, they can go into loan rehab, loan consolidation. You just have more, you have more time to figure it out.
Yeah, hence the roadmap that we give. Look, I've had problems with this, and I've got them graded. And it's it's workarounds. There's always a workaround. I don't want to hear no. I want to hear how, right? So in this case, though, we're looking at DU. This is a big, big red flag. So I would definitely look at lates in student loans. All right, real estate owned. This is big, real estate owned. Okay. Personally, what I've seen in the past when I have read Desktop Underwriters, a lot of the agents are not putting taxes and insurance in it's called the VOM section, all right? And that is the real estate owned in our Encompass database that we're pulling this Desktop Underwriter for. So my question, if I'm a buyer's agent, okay, you have a house, all right, is it free and clear? Do you own a lien on it? Why am I asking this as a real estate agent? I want to know if there's a married couple and one of them is only on the mortgage and the other one's on, there was prior to marriage, let's just say, hypothetically speaking, do we need to count this against them? I've seen so many DTI issues because they're not calculating DTI correctly because of ownership. Or is it an investment home? Or is the spouse on title and the mortgage prior to marriage? Do we count just the title and the taxes and the HOA in that case? there's so many guidelines that a lot of loan officers are not reading. In this case, if I'm a buyer's agent, this is a big question. Is it the proceeds that you're using to sell that home to come in to buy this house as a listing agent? Right? These are things you want to look at. And typically, if we see something like this, our presentation is that the desktop underwriter is ran, but we have a whole label of what's going on with the file. So then when we give it to the listing agent, transparency is key. Now, in some cases, it really backfires because people prejudge people in these days, and it's kind of sucks. But, in this case, I would say this is the proceeds that this person is using to put 20% down in a conventional loan. People need to hear that, meaning the listing agent needs to know that. It's contingent on that. And it's better to show your cards and be truthful about a situation rather than to hide it and say, hey, by the way, it was contingent. I'm going to need an extension for 15 days because they haven't sold the house yet. So real estate owned is a big factor on DU. All right. All right. This is another one. I just had this happen last week. 2 lenders approved this individual, the same individual I was talking about last night. 2 lenders, 2 loan officers, 2 people that should go get their tests again. Not to bash them, but it pisses me off because it's just no one's reading guidelines. No one wants to go to the, Google it. They can Google it. I mean, it's on a matrix through the institution that they're actually putting their license under, but just look at it. In this case, I see this all the time. I had one yesterday as well. This person was pre-approved for $350,000. We can only go up to $315,000. So that was wrong. The other person didn't understand income, that I guess didn't understand income completely. So the income was completely off. If I am a buyer's agent or a listing agent and I'm looking at desktop underwriter, because this is a screen snippet of DU, and you guys see verification of employment, VOE, you need 2 years, most recent 2 years of income. In this case, she being the client, the borrower, had 1 year, 3 months as a 1099 subcontractor. Then she went to W-2, okay? She never made overtime as a subcontractor. We can't use her overtime income, period. Can't use it, all right? There's no overtime income. Everyone was using the OT. So the DTI was perfect, but when you remove the OT, we don't have a deal. We had to squeeze an elephant through a mouse hole. That's my saying, Melinda. So this is a big red flag. Do they have the 2 years? I would look and verify with that loan officer. Do they have 2 years work history? Okay, good. Work history. How about the same employment? Oh, they've been an RN for 5 years. Done. Perfect. We can use the differential income. We can use everything. Okay. It becomes very complex with incomes and other types of incomes. What's other type of income? That's a question I would ask. What is another type of income? That can be differential. That could be overtime. That could be
1099.
1099, exactly. So what we are pulling from the work number, okay, that is verifying their work. Some employees don't have it, some do. They're putting they're lump summing everything together. So we're asking them to break it down, obviously on that VOE, or having their employer do that. So to be more specific on that 2-year work history. So this is where income and DTI issues come all the time.
Anthony, quick question. What about where it says verification? Does it always have verification? Like what should be there? I've seen them blank before, like they weren't verified yet, or like round numbers, like no one gets paid round numbers, right?
That we're going to go into that as well.
Okay.
So basically, no, but you're absolutely right. And that's the one below that. So if I'm a good agent, all right, I'm going to look at the dollars and cents and I'm going to do my math, right? I'm literally, guys, take the time, man. Like literally go slow and steady, because you're talking to someone that wants to go fast. It's hard for me to go slow and steady. And do the math, 39, 98, 40. Okay, she's making $39,000 a year. The 1279, that could be her 1099 income, because she has other employment, validate this stuff. All right. And yes, other types of income can be 1099.
And as a listing agent, guys, if it's your listing and you're getting this DU,
Absolutely.
it's important to look at it because right now everyone's getting multiple offers.
Yeah.
Right? It's unlikely that you're not getting multiple offers or you have a couple. I know just in the last few months, I've had listings where there's been like 20, 15 offers at a time for one property. So now when you're looking at, of course, the sale price is one factor, but you got to look at the details to see what else is there. You don't want that. You don't want your listing to be the one that went under contract 5 times because of all these problems that are going through it. So pay attention to the detail. And if you're not sure, these are very technical, ask, right? So if you're getting multiple just pre-approval letters and you get a couple DUs, you know that those offers are probably stronger if they have the right information in there.
And validate the employment. I mean, no one's going to say, what are you doing? I'd ask the buyer's agent, if I'm a listing agent, hey, this person, is not on furlough, right? We got stability in the job. I mean, COVID's a real thing. So don't be afraid to not ask these questions. I would be asking as many questions as I can, and don't be overbearing with the situation, but be tactful about it. This is going to kill deals. I mean, I've two lenders. If she went into contract with one of those lenders, nightmare. It'd be a nightmare. All right. And it's just that we ordered VOEs up front, WVOEs up front, written verifications up front, and did our due diligence, and this is what we get. So this is key, guys.
And I can attest to that because I'm under contract right now personally, and I got my husband's VOE came in like a couple days after we applied. So early is key for everything, right? Being organized is key for everything.
Amen. All right. So we've got, I believe, 2 more. So assets, we get this all the time. Verification of deposit, VOD, okay? How much money do they have in the bank? If you are seeing a number on there of $10,000, there is no such thing as $10,000 even. Maybe there is, maybe there is, I'm not going to say there's no such thing, but
maybe in a savings account, right? Where you're putting like even numbers in at a time rather than a checking account where there's always pluses and minuses happening. That just seems like fictitious to me.
Correct. So there's one checking account in this case, all right? And I did not blank out this guy's name. That stinks. That being said, so I use this as a hypothetical scenario, right? $10,000. First of all, what's banks? Who's the institution? What the hell is banks? Okay, what bank is it? And if they're missing the small details, that means they're rushing through the actual DU, meaning the loan officer. So now I am technically bashing here. So in this case, if there's banks or they're just putting numbers in and it's $10,000 to spike the assets, this is crazy. I know this is sounding crazy. People are probably saying, what are you like, this is awful. This is what's happening a lot. I can tell you that. It happens quite often. And when someone wants a DU, I could put $100,000 in there. I can send it out. Now, would I do that? No, I've got a license. I'm not into that type of practice. And I'd probably lose my job at PureMG. But all I can say is that I've seen this, and I don't think there's any even numbers to get that refer ineligible to become approved eligible because it's lacking assets. No problem. We're going to put $10,000 in of fictitious money. Where is it coming from? We'll figure that out later. Let's push it through. All right. So that's what's happening now. Let's take devil's advocate here and say there is 10,000. It's going to be a gift from Uncle Buck in Alaska, and then I would put possibly gift funds in there as institution to be transparent to the listing agent of $10,000. That works. Okay, be detailed, but ask questions as a buyer's agent. $10,000 even, $1,000 even, $3,000 even. What are we doing here? We're just manipulating numbers to get an approved eligibility because the listing agent is requesting it. Right? This is the biggest red flag I see out of everything, and this really should have been number one. But we see this all the time because if 78% of the nations live in paycheck to paycheck, you're going to have issues right now with assets. Most people don't have $200,000 in the bank. So in this case, we want to do our due diligence, and we really want to make sure that the amounts that are in that DU are accurate. Okay. You guys are asking for proof of funds. You guys meaning listing agents. Some of you listing agents are saying, hey, we want proof of funds, cash offer. Same thing. I would say, send me a pre-approval letter, send me proof of funds as well, send me the DU. That's me personally. Okay. So I can cross-reference what this loan officer did in the assets. So this is all DU right here. This is what you're going to see when you view it. All right. Income and credit are the last two. There's different DTI restrictions. I'm not going to get into each and every one of them. I'm going to use this one as an example. Okay. And this one is FHA, because a housing ratio past 46%, you're most likely not going to have an approved eligibility, and a back end debt to income ratio, all the liabilities and the housing, that's 56.59. You're usually not going to get past 56.6. I've seen veteran loans go up to 60%. It's what DU likes, right? So in this case, if I'm looking at this desktop underwriter and I'm a buyer's agent or I'm a listing agent, and I see that their threshold here is 46 and 56, that's a red flag. What if insurance comes in $10 higher? Now we're screwed. We don't have a deal. What if there's HOAs that we didn't look up because we didn't look at Broward County's property appraiser's website, and we didn't realize there was a PACE on there for the taxes, and the taxes now are high, but yes, they have to pay it off, but we didn't validate taxes, and we just put a tax number in there, and now the back end debt to income ratio goes up to 62%. We have a dead deal. But you sent the listing agent a DU because you didn't look this up. This is stuff that I would look at, and I would have that person break down the income, and I would ask questions. Okay.
Anthony, I got a question for you based on a question that we got in the chat. What is the strategy? Do you normally give the entire DU to the listing agent?
I do. I do. I wouldn't do one page. Look, the reason why I do that is one page for me, what am I hiding, right? But I get confirmation from the borrower first and foremost. I know their credit's going to be on there as well. But I believe in transparency. I believe literally in showing my cards and talking it out and collaborating together. So yes, I would send the whole thing.
Someone had mentioned in the chat, like, what happens if you only get one? Like, do you get any strategies as a listing agent on how to come back from that and like get the entire report? I mean, like, would you say, like, what are you hiding? Why aren't you giving me the entire report?
No, I would just say, look, at that point, call my banker so he can validate, what we're sending. I just had that happen to me. And then he knew who I was, and he's like, all right, everything's great. And it looks good. I'm doing a checkup, just checking your temperature, because I do a lot of business with this listing agent. No problem, man. I'm not going to expose the credit and have them run credit and do all that stuff. I'll be more than honored to go over that entire, file for that individual. That's the way I would play it. Hey, call, XYZ. If you have a lender, that lender should be doing that. There's always a way, to deliver, the goods. I wouldn't hide anything, and I just would be transparent about the situation. If you're getting one page, that's fudgy to begin with.
Well, I think one page, it eliminates the purpose of the DU.
Completely. Kind of. All the scenarios that we have are out the door at that point.
Because would you say that depending, I guess it's always worth the paper, like who wrote it, right? So depending on who did that DU, if they're adding figures in, because all these figures, they can be manually changed, right? So they could play around with it. So if that's the case, it depends on who's doing it and who's providing it. So if you can't see that there's whole numbers, or you can't see that there's those extra like asterisk clauses about certain things happening, then what is that DU page one really worth?
It's garbage at that point. And that's my humble opinion. You can't determine if there's a deal or not. Now you're going to get people that are going to tell me that you're telling everything, the whole story. They need down payment assistance. They have crappy credit. They have hardly any money in the bank. Yeah, I get it. I get veterans who are fighting for our country turned down. That's a problem too. All right. So, people are going to prejudge everything by looking at this because cash will be king. There's no way you slice it. Cash is king. They're going to take cash offers over anything. Conventional is probably going to be the next thing. Because in a perfect world, someone is going to prejudge someone saying that if they can put 20% down, that individual's got their SHIT together. All right. Typically, FHA is for low, moderate income buyers. I like FHA because I'm not putting 20% down on a long-term investment. That's just me. I'm not liquidating money that I'm yielding a high rate of return in on Amazon and all my stocks and bonds for a long-term investment at this point. I'd probably, go over that with the listing agent and say, that's why we're going FHA. Who the hell's putting 20% down at these days?
Especially with the rates, right?
Rates are so low. I mean, I could pay it off anytime. I can do anything. At that point, I'm in control. But they're going to go into mortgage insurance and all of that. In this case, I just don't see one page. I think one page, you're selling yourself short. If you're going to do all pages, you better have a video going there. You better have a consultation. You better get everyone on the phone saying, hey, this is what we're going to anticipate. This is what we're doing. We just had this. I had it with Daniela, a good agent of mine. We called the listing agent and I went over credit and I said, I'm doing a what if simulator. We're spiking the scores. They had $500,000 in the bank. So that was really good. But the actual listing agent called me. We're actually doing business. She loved how we operated and loved the fact that I took the time to go over this with her. And she was an ex-loan officer back in the day. So she understood it, but had a question about the credit. How does one make XYZ have $500,000 in the bank and have a 625 credit? Dude, stuff happens, man. But we got to keep 680.
We have more questions. We have a few. What percentage is the max DTI? Is there a general rule for max debt to income
program?
Okay, so give us a quick.
FHA 56.6. And
conventional?
That's not conventional. You're going to be at 50 right now. You're pushing, if you're lucky, past 45%. Right, the federal government, I don't want to get into that. I'm not going to get into that, but you're 45% because there's a lot what's called credit layered risk right now, and we're seeing that quite often. So trying to push it to 50% is an issue going conforming. You're not going past 50%. That's for damn sure. You're lucky if you can get it past 45. The federal sides, Wells Fargo, Chase, all that, they can't go past 45. That's their cutoff.
Gotcha.
So, and I'm not sure if you want to actually go a little bit more in depth, make it confusing, but that front end and back end ratio. Just
you want to elaborate on that, man?
Sure, absolutely. So what you have, Anthony, what he was just went over is the back end ratio. So what that's going to be is your housing expense plus all of the monthly payments that show up on the credit report. That's the total DTI, which is on the back end. There's also a ratio on the front end, which is just your housing expense. And you can't just meet one or the other. We've got to meet both in order to get that approved eligible. So just be aware, it's not just a one size fits all. Different programs, there's two ratios that we got to hit, a front end and a back end for FHA and conventional. So.
And just to touch up on that, so if I'm a buyer's agent or a listing agent, this would be unacceptable for me. Even at 50% FHA, I wouldn't take it. I would want, and that's just me as a listing agent, okay, to each their own. It depends on the situation.
Especially now, because we're in such a competitive market. If now we're speaking to the listing agents, right? If it's your listing and you're seeing that, we're comparing apples, right? So the idea is if you're going to say, oh, the offer with the DU is stronger because they have their stuff already in and their information's already processed and we know they're going to get approval, then you need to see the whole thing to consider it, right? I would say if you're going to otherwise you put it in the same basket as the regular approval letter, pre-approval letters, because you're not seeing really any details. The idea of this is for the details. And then, if you're comparing apples to apples, you got to look at that. You got to look at the DUs and see, who's a stronger borrower.
The first thing that jumps out to me, Melinda, you brought it up before, is that there's so many offers on places. That's a great thing. We've got an incredible market right now in our industry. But what it's also bringing out is what you said, a lot of rushes and maybe, fibbing on these DUs to make it work. So the first thing that jumps out at me, if I see a back-end ratio at, let's say, 56, as a realtor, if I was doing that deal, the first thing I would go to, I know it's at the high end to be approved. I would look at what the loan officer inputted, because it's whatever he puts for the taxes on the property or the home insurance, because he's estimating those numbers and he may be lowballing the home insurance. When you know as a realtor, you know what? I know that insurance would be about $175 a month possibly on this house, and he's using $100 a month. We're already maxed out on our ratios. So if we put in the real amount for homeowners insurance or property taxes, we don't have a deal. So, that's just a quick hack and a rule of thumb. If you see the ratios that are high, look to see what their input is in approximations for the ingredients of the monthly payment, because you'll be able to snuff out. And it's a good topic to start. Hey, Mr. Loan Officer, why are we going with these approximations? I noticed that our DTI was high. All of a sudden, you've let that loan officer know, hey, I know my stuff as a realtor, and they're asking me, they're not going to try something again. So that's just what I'm seeing, in the first thing.
I love that. Cross-referencing. On this report, folks, it does show that. I don't have the snippet here. I'll add that snippet and then send it out. But I mean, it's going to show the breakdown of the monthly payment. And so that monthly payment, you're going to cross-reference that and do your own math to make sure the ratios work. Because you know that area better than anyone. You're listed in the house.
Instead of, if they balk at sending you the entire DU report, which many loan officers will, that information, that's on the last page of DU. It's a summary of everything. So it's going to give you all the monthly payment, the income, everything that you use. So get the first page and get the last page. And you're going to be able to really determine and size up whether that's legitimate. It's going to have all the assets, and it's not going to disclose what the credit is, so you don't have any issues there. It's just going to summarize what the whole profile looks like that they inputted. So,
Lauren just put in the chat, I've had to turn down several offers on my recent listings because of those items. The LO would lowball taxes and insurance, and once I call them to give them accurate figures, it throws off the approval totally. So that's a good job on you for paying attention to those details.
Awesome. I love hearing that. All right, last thing, credit. This is also on the DU. This actually works in our institution because we're still taking 580s, a lot of overlays with other institutions of 620, 640, 660, FHA, 580. In this case, your middle score is going to be a 595. That's crazy. Okay, that's difficult because if you have the approved eligibility, okay, any little thing with a credit score like that right now can throw things off. All right, and so if I am a listing agent or a buyer's agent, I'm probably going to want to see something a little bit greater than that. Now, I don't want to get into margins and rates, but I know that in our sector, okay, and I got to be very careful saying this, anything below a 640 is going to be some seriously crappy pricing, okay? And what I mean by that is you're going to have discount points. So if you're seeing anything below a 640 and then you're seeing assets of 15,000 and you're putting one and one together and saying, wait a second, it's a $200,000 house, that's $7,000 right there, down payment, probably 3% in closing costs. They're just making ends meet with 15,000 in assets. They're not factoring in pricing right now. And pricing right now is not going to be the best when you're below a 640. You're dealing with the wholesale side. It should be definitely aggressive, but there's still going to be cost associated with that rate. What is the cost? Have they gone over that cost? Because that will throw off your assets. Therefore, now you're going to get an ineligible because you don't have enough liquid assets. Does that make sense to everyone? Yes?
Yes.
So
it costs more money to borrow if you have a lower rate, generally speaking. So if they have a little bit of money and a low rate and a lot of other red flags in there, it's something that's going to be a problem, right? So keeping it in simple terms.
Correct.
Right?
Keep it simple, stupid.
Keep it simple. All right, guys, I had a whole presentation, but Anthony hogged the whole time, but I let him go because it's really important stuff.
It is important stuff. I mean, it's a great topic. So.
Yes, it is. So I'm going to just touch on one portion of what I was going to talk about. I'm not even going to share my screen. When we're talking about reviewing the offers, a few things I want you to pay attention to. When you're looking at pre-approvals or DUs, what loan type are you seeing and what loan type is on the offer? As a buyer's agent, make it match. As a listing agent, make sure it matches. It sounds simple, but I see this all the time. If your buyer is applying for the wrong type of loan and doesn't match your contract, they're technically in default and therefore can risk their deposit. So don't make them, like, if we're talking about like a seller who really wants to go after the deposit, there's that you want to keep it as clean as possible. So make the loan type match. If you have a change because of the whatever, remember Anthony mentioned some things, you could always change it to this or that, etc. halfway through to try to make things work with regards to the
step underwriting.
with the student loans, for example, if they're not, you can't go FHA anymore because of the student loans, you got to go conventional. Make sure you make an addendum to change that later on. Okay, always make sure it matches. So that's there. Make sure that the amount of the loan amount on the approval letters or the pre-approval letters, the DUs, whatever you're seeing from the loan side, matches how much the loan amount is going to be on your property, right?
Yeah.
Super important. And we did a whole class on this already, but if your property is a condo, we're going to talk about it again. It's super important. You need to know what type of loan is possible on that property. Right off the bat, if you're seeing like an FHA 3% down, it's very, you need to have a conversation because the condos are listed as to what's pre-approved for FHA, right? There's a handful of them and that's it. So if your property's not on that list, what does that mean? You would have to do a spot approval. I've seen 2 since they've allowed this to start. It's a lot of work and it's not always possible. There's multiple layers. So the point of the story is don't get your property tied up with the wrong borrower. Know what loan types apply for your property. And if it's a condo and you have the buyer, you need to have some serious conversations with the loan officer and make sure you collect as much information up front for that to be reviewed before you put their offer. Do not waste your time and your energy and your client's frustration on a property that from day one will never work. I can't tell you how many times we get to like the day that we're supposed to close and we're still not approved and we're still waiting for condo questionnaire. And no matter what I say, hey, is this I literally will tell the loan officers, hey, how are you going to make this work with 4% down?
You do that.
5% down. How are you going to make this work? I literally will call my people. Hey, this is like, I'll call Anthony. I'll call my people. How is this going to work? Is this going to work? This smells fishy to me. And in the end, they promise, no, I know how to get this done. I'm done. I know how to do this, whatever. Okay. And then what happens? Canceled file. And that really stinks because what happens? Your seller's, if it's your listing, your seller's pissed, right? Oh, we just kept off the market for 30 days, 45 days because they probably asked for one extension before they canceled because they're waiting on the condo questionnaire, right? But really, I hate that's like this is one of my biggest pet peeves of like my industry, of our industry, is that because we waste so much time and energy. And if it's your listing, you should never have taken that offer to begin with because if you're on this call, you know better. You know to ask the questions. If it's your listing, get the data already from the association, upload it to the MLS, and then when you get the offers, have the discussions before you even present it to your seller.
What data would you have?
They're able to find out if there's litigation with a simple phone call. They're able to get the budget right off the bat from the seller. Yeah. Budget is key.
Yeah.
Know if there's litigation. If it's in a flood zone, if you're on the beach, there's got to be flood insurance. Right, Anthony?
Yeah.
There's not. It's killed deals before. In the past, I think years ago, they used to be able to get the flood just for the unit, but they can't do that anymore, right?
No. Yeah.
So,
Good
so
call.
yeah, I know my condo loans. I've had so many mess up in 10, 11 years.
You learn from it.
You learn from it. And I will tell if I'm happy to review offers with the listing agents when I rep sellers. So, and I'm able to do that as an attorney. So I send me the offers and it's a second set of eyes. And then I'll say, speak to the loan officer. This smells fishy. You know what I mean? Something's wrong with this loan. What's the budget? Are there enough reserves? Ask, even if you don't know the answer, ask the question, collect the info, and run it by someone that has the information, because that is key.
There's a question that we just got, and Condo Questionnaires is one of the episodes that this person is trying to engage with. We had this episode. We did talk about condos.
Yes.
But again, I mean, I think it's a great episode. We don't take anything unless I see a budget. In fact, I just got a real estate agent's mom who's trying to buy a house. I'm like, look, I love Mama Dukes, but we need a budget. I don't want to even look at this thing until I get my budget, and then I'll validate that I can do this deal, because I know what to do and I know how to operate, and I don't want that to screw up because I like that agent and I'm going to respect her mom, obviously. So do your due diligence up front, guys. I mean, condos.
If you're a listing agent, get the info up front, upload it to the MLS, and make sure, because we don't know who we're dealing with on the other side, right? So make sure that the other side is giving you the right information. Look at that offer, pay attention to how much is being put down so that you have that information. That's all I'm going to talk about because we're running out of time.
Any questions?
What I can think of here and just hearing you, there's a level of confidence, and this is for all the realtors on this call right now, and I can't impress this enough. Don't be shy to ask those questions. Yeah. Remember, we're all wanting to get that next referral from that client, right? And what a way to get that by being the gatekeeper for your borrower, or for that transaction. You're that guard against all these holes possibly in a tragic file or a turn down or a cancellation. So it may seem from listening to Melinda that was pretty upfront and forward and kind of rough to have that conversation. You want to develop that skill because it's going to bring you more business when the word gets out. My realtor is a bulldog, and they're going to vet everybody in this process to make sure my deal goes smoothly. So it's worth asking those questions, I promise you, in the long run. That's very helpful for you to develop that skill.
Yeah, I mean, you knock out those dud deals right off the bat.
Yep, absolutely.
There's a question on Facebook, and it says, if there are student loans, it cannot be FHA ? Okay, that's a whole different topic. I do have a cheat sheet on that as well. And these cheat sheets you guys should be asking for, because we're sending them out by the dozens, and it's just great references to educate yourself as a buyer's agent or listing agent. To answer that question, yes, it can be FHA, but there's 1% that you're going to count against those student loans. So it's going to drop your debt to income ratio, therefore your buying power. Okay, in that case, you're probably going to want to shoot for what's called a conventional conforming product to see if they're in an income-based repayment plan. But that should answer that question. Any other questions?
That was good. So at the end of the day, you're going to get these DUs. You're not probably going to be able to really say, this is a good one, this is a bad one, because I still can't do that. And I taught this class with several times with Anthony, with others, and I know that I can't do it. I'm still going to ask the questions if I get them. So that means you should be asking the questions, but you could definitely knock some stuff out right away. You'll know that if it's ineligible, put it to the side. You know, if they're rounding up numbers, red flag that, right? And then you put the best ones to the top. You know, if they have their insurance and their taxes off, you better correct that and then see if it still works. And then once you have those couple and you're comparing apples to apples, call Anthony, call Noel, call the people you know, and they'll help you work it through. And then I'm happy to help you work through the offers themselves. We're going to put the offers, the actual contract on a whole other episode. We'll push that to another day because there's a lot of good info on that. So I don't want to rush through it.
And we can also, I mean, I'm getting questions about condos, and also I know you guys were thinking about itemized worksheets and loan estimates. That could be another topic as well. But to answer that question to the private text that I'm getting here, this is all pre-recorded. I'm sorry, recorded on our YouTube channel. So the condo episode should be on there. And then if you guys need the content is also on the YouTube channel. There's actually a link that allows you to download all the PDF documents. I'll send you the condo cheat sheets. That is deadly. The cheat sheet itself, I've sent this numerous times after every episode. It helps a lot of agents out. It's a tutorial with cheat sheets embedded into it.
Yes, it's good stuff. I have it in my reference manual for my team, because when I'm reviewing offers, I'm like, or even sometimes when I'm being asked to help out with an addendum with credits and stuff, I go, what type of loan are we? Is this gonna, overkill the loan? We don't want to do that. That's a big problem. So thank you guys. Anthony, thank you for those resources. We'll share them all with you after today's episode with the link to today's recording. Thank you to all the nice, kind comments, and we'll get you those information soon. And that's a wrap, right? 12 o'clock on the nose. Boom.
That's it. I gotta go.
Boom. That's a wrap.
Take care, guys. Thank you. Have a productive
Bye,
week.
everyone. Take care.